What's going on, everybody? It's Saturday, September 24th, 2022, and this will be daily episode 16, or just kind of a week review. I didn't get to it last night, wasn't feeling too well. I was quite exhausted from the week. So, looking at yesterday, um, I was off on my analysis, which I posted in the community tab. It kind of upset me, but that's just a reality of a trader. And sometimes you're going to get things wrong. You're going to miss moves. You're going to take losses. And, as cliche as that sounds, you really have to get used to that idea. And you have to get used to the idea. I mean, that's why I'm so heavy. I know I haven't talked about it too much, but it's something I'm going to make a video about. I'm going to go over kind of my own journal, what I do, um, besides just technically what I do to really help myself with psychology. Because as soon as you really find a system that works for you technically, the next piece of the puzzle is really your psychology, which is making up a huge portion of your profitability because there's two systems in place, in my opinion, when you're trading. It's your model, the thing that you're trading technically, and then it's your personal model. So what is your, first off, your technical win rate, and then what is your personality win rate? You have to combine those two because your technically model, let's take for an example, ICT's YouTube model, that could have, let's say, an 80, 90% profit win rate. But yourself personally could have a 40, 30, 50% strike rate because you're tilting, you're over trading, you're fear of missing out, you're taking profits too early. There's so many different variables and elements to this game that are solely dependent on your psychology. And this is, the weekend on a Saturday or a Sunday or a Friday night, you need to take a step back and look at the things you did right technically and the things you did right/wrong on your psychology side. And the reason I'm talking about this is because yesterday I think it was more or less it was just a human error. And that's something I used to get so frustrated about. And if I made a mistake, I would get so angry at myself. But the more and more you realize that A, the algorithm is never wrong. It's you perceiving the algorithm that gets it wrong. Now, on the flip side of that, you can get angry at yourself for making mistakes, which is, mistake tilt. But you have to understand that you're human. You're going to make mistakes and errors. Now, it sounds easy to say, but in the moment, you're going to get extremely frustrated with yourself. You're going to get extremely angry, and you're going to want a revenge trade. You're going to want to correct that mistake as quick as possible so you can end the day positive. How many times have you taken a loss and immediately you jump right back in because you want to? It's not necessarily that you took a loss. You want to feel fulfilled. You want to feel as a successful trader because of that win. So don't put so much emphasis on your P&L, on your money, on whether it's going up or down. Put emphasis on your system and whether or not you're following it correctly. Are you taking the trade based on the rules and the criteria you have set out for yourself? And then after, let's say, even if you lose, are you keeping yourself grounded? Are you not over trading, tilting, revenge trading? Because speaking from experience, I have probably one of the worst, and I'm sure everybody can agree with this in a test if you've been trading for a long time. Tilt is a major, major problem because it has so many different layers and variables to it. You can tilt on a dime if a lot of things are accumulated over time. If you've taken a lot of losses, or there's just so many underlying things. But enough with the psychology rant. I definitely will do a video over it because I definitely have so much to say about psychology because it's so key and so important. There's a famous quote from ICT. I may butcher it, but he says, "You may know my concepts, but you won't be profitable because you don't know yourself." And if you really understand that quote, it's so powerful because if you don't understand yourself, you don't know, and you're only going to know this with experience and taking losses and over and over and over again and lessons. But if you don't know yourself extremely well, like I know the exact moment when I'm about to tilt, when I'm about to, FOMO. I know all these little steps, and the book I talk about, The Mental Game of Trading, I've created a map Basically, I can see stage 1, stage 2, stage 3, and right when I'm about to tilt, I know exactly what to do. I know exactly what to say to myself. I know exactly either to walk away from the charts, and that's not an easy thing to do. That takes practice and time. Yeah, let's get into the charts because I could talk about this for hours. Looking at the daily chart, yesterday I was talking about, or on Thursday, I was talking about looking at the sell side liquidity at 37.21, I believe, which I was mentioning. We went ahead and took that low out. I was looking for that retracement back into the weekly range. I also talked about on the weekly time frame for the power of 3. Either you're looking for that retracement on a Friday, the TGIF, you're looking for that retracement back into the weekly range. Doesn't mean I'm looking for price to go all the way back into the weekly open. I'm just looking for a small retracement back into the weekly range. Or you're looking on the flip side, you're looking for that expansion lower. You're looking for speed to end the week out. And that's what we got. Was I expecting that? Not necessarily. I just misread the market. So it's something I'm definitely going to journal extensively about. Going into it, I even noted, I was looking at it at the open. I was looking at, we'll go ahead and go down to lower time frames. I was looking at, not necessarily 1 hour, but we were right here at the open. I'll go ahead and do a replay button. So this wasn't even like this. We were trading actually higher. And I was looking at this 15-minute fair value gap. I was waiting to see how price reacted off of it. And I just saw in lower time frames, I thought we had some bullish SMT divergence on the daily chart, and then on even lower time frames coming into the open. So I was just looking for that long. I wasn't looking for very much. I was looking for maybe 20, 30 points, maybe to end the week out, to retrace back in. I didn't think we were going to get this long push out, because I believe the sell side I was mentioning was here, actually. We were right here. We took out that sell side liquidity, 37.21. And then we had US 30 making a lower low on the daily chart, while US 500 and NASDAQ was making a lower high. And then even on a 5-minute time frame, we were making a lower low here. NASDAQ was a higher low, I believe, and US 30 was a lower low. So it was all like a lot of bullish SMT divergence, and I saw the displacement higher. We were taking out sell side on the daily chart, and even on a 5-minute, we ran the sell stops underneath here. We displaced higher. And then I was looking at on a 4-minute, which again, it's very funny when you get a trade wrong with knowing ICT's concepts, because you can literally just look at the trade after and be like, oh, I just misread it. That's all it was. I simply misread the algorithm. It wasn't the algorithm stopped working, my model stopped working. It was simply me just misreading it, and that's all it is. And sometimes you can get, without revenge trading and being mad, I did this last week, you can misread it, get a trade wrong, and then get back into sync with the algorithm and get back into order flow. So I ended up just not taking any more trades after that. I was like, okay, I ended up on the week positive, so even with the loss, I was happy with it. But the long here, I was looking at this displacement higher, and I was looking at the 5-minute and the 15-minute for value gap bearish. It just seemed to me like we were in such a deep premium coming into even the news driver and into the open. I just wanted to see a retracement back into a fair value gap beneath discount, so I entered in on this 4-minute fair value gap, and then there was also the 15-minute fair value gap I was looking at to go long. There was an order block here on the 30-minute, which isn't an order block, which again, you just misread the market. A high probability order block is a order block coupled with a fair value gap. There is no fair value gap coupled with it on the 30-minute. So that's something to note. And sometimes it's just, things happen so quickly that your mind can't process it all. And that's okay. That's just time and experience and knowing these markets over time. But I was looking at this order block. I was looking at the 15-minute fair value gap. I was looking at even the 5-minute. I was expecting price to maybe come down into here. And I saw this. This was really nice. Even on a 1-minute or 2-minute, I saw a really nice push out of that fair value gap. So right when we were here, I was like, okay, well, you know what? Maybe we can, expand higher. I was just really looking for the buy side liquidity to get rated above here. And these are relative equal highs. So I was expecting some type of bullish, retracement coming on a Friday, but we didn't get that. So let's say, if I wanted to get back into sync with the market, there was a 5-minute fair value gap here to go bearish. If you look at the 4-minute, we traded back into that fair value gap here. 3-minute, nothing. 2-minute, and the 1-minute, there's really not too much, a bearish order block here. The 1-minute, basically, this is just a market maker sell model. Original consolidation, accumulation, reaccumulation, smart money reversal, and then we distribute back into the original consolidation. So the sell side liquidity resting beneath the original consolidation here. So this is a nice market maker sell model on a 1-minute. That's how fractal price can really be. So we traded back into this fair value gap here, retraced lower. If you do from this dealing range high down to the dealing range low, remember the 4-minute and the 5-minute fair value gap, we're coming into a premium. You can couple that with the bearish order block here. I know this is all hindsight, but I'm just trying to journal it from my own experience. And we ultimately just expanded lower. There was a couple good setups. I was off the charts by this time, and I didn't expect price to really rally this deep, but it's something that you could have maybe gotten into. There's a nice 15-minute fair value gap here we retraced into, expanded lower, and then at the weekly, basically an hour before the close, we rallied back into that weekly range, which was nice to see. But you can just see how bearish price is. There's no really reason for price to retrace higher right now. On the 4-hour, we just expanded lower, reacting off of that 4-hour fair value gap, which I said there was no reason for us to retrace back higher into that fair value gap. I noted on Thursday, we already did the work here, so we were just expanding lower. The 1-hour fair value gap, that was another kind of keynote to understand why we were bearish. If you look at not necessarily the wick, I've always talked about always pay attention to the bodies of fair value gaps. That's telling the story of it. So look at the close of the fair value gap or the candle. We closed beneath that fair value gap. So that was nice to see. 30-minute, we had this fair value gap here. We closed above it, but again, the higher time frame PD array means more. 15-minute fair value gap retraced into that, and then ultimately we just bled lower. I was trying to switch gears here. After we expanded lower, I was telling you guys to take a look and keep your eye on this order block here. The reason why I was noting it was we expanded lower. It was a really nice displacement lower, especially on the 15-minute, 5-minute. And I was just looking for, I actually set a limit here, never got hit, even though it came a few points away from it. But I was just looking for that little push up into the order block and then us to expand lower. But we didn't get that. Looking at next week, let's take a look at NASDAQ. So NASDAQ hasn't taken out this low here, but I know US 30 has. That is a bullish SMT, but that doesn't necessarily mean that we're going to be bullish right away. We could maybe on a Monday open or Tuesday get a small retracement back in, but overall I'm bearish on this. Just because we took out a swing low doesn't automatically mean we go long. And the SMT divergence bullish doesn't mean you just go long. There has to be a model that confirms that on lower time frames, right? So NASDAQ and US 500, I'm still going to be going short until we take out these lows here. And then I'm going to be looking at the weekly chart now that we are touching into the sell side liquidity that I've been noting, resting underneath 36, 30, 30, 36, 37, right? 36, 35. So I'm looking at coming into next week, the next draw on liquidity on a weekly chart is this fair value gap coupled with the order block. So these two down close candles. And once we reach into this area, I want to see how price reacts to it. If we ultimately on lower time frames are really, really bearish, we have relative equal lows resting underneath here. And then we can start looking for some more areas. It's very scary. It's not scary for us, but it's very scary to see how this is playing out on a weekly chart or even a monthly chart. I talked about for people with 401ks, retirement, etc. Whoever's in charge of all this is going to make people pay very, very badly. They're going to make people very scared. It's very cool and interesting to be the one analyzing these markets, especially on a deep level like these concepts, because you can understand what's really going on the agenda side of things, whoever is in charge, who is ever above the government, if you want to go conspiracy. Um, it's going to get very scary out here, guys. So please protect yourselves. I know ICT's talked about stocking up on food and getting your house prepared, because I do see something. The markets tell you what's going to happen in the real world, obviously, because it's the economic driver. So pay attention to this. Going into next week, I'll probably post something tomorrow, or maybe coming into Monday, what I'm really looking at, depending on the open of tomorrow. I wouldn't be surprised if we gap lower. If we gap lower, that means price is more than likely going to really try to attack that sell side right away. So if you have any open positions, which I highly suggest never ever do that, especially in these market conditions, how volatile this is, just close out your positions for the weekend. There's no point. So with that being said, guys, I appreciate all of you. I'll get back to you guys on probably tomorrow. So good luck and good trading.